Hi guys, welcome along. I'm Lucas Rogers from the Rogers Property Group. Today's just a quick video on how media seems to be portraying what's happening with property prices and values in regards to the coronavirus. Now, I don't know if you can remember back to March and April as to when various media outlets, the big national news programs and some of the big newspapers, they came out saying that they were anticipating, or predicting should I say, that property prices were going to drop by 30 and 40%. I think I read one where the lowest was about 25% drop in property prices as a prediction. Now, what's actually happened? Well, funnily enough, property prices have been very stubborn. Property prices overall are very resilient to market cycles, and they don't really drop. Now, in regional areas and smaller markets they do, but closer to the capital cities, what happens is they rise in the good times, then they sit very flat in the bad times, maybe taper off a little bit until the supply and demand ratios get into their right perspectives, and then they start to increase again. So what's happening at the moment? Okay, well, there's various numbers that come out, and there's various economic agencies that look at these numbers, CoreLogic, SQM. So what's come out is SQM over the last couple of months said property prices have actually increased by 1.1% overall in Australia for the last month. Now, CoreLogic, who is also a big operator as well, they've said that property prices have dropped by 2%. So look, it's maybe somewhere in between. It depends whose numbers that you're going to rely on. But the bottom line is this: property prices have not dropped by 10%, they have not dropped by 20%, and they certainly have not dropped by 30%. I challenge anybody to show me a property, say in Brisbane or Melbourne, that they could have bought in January for $600,000 that they're now able to buy for $400,000. Okay, it's just not happening. Okay, it's just not happening. Property prices are too resilient for that. Now, what's going to happen in the future? I think that there's going to be a little bit of turmoil coming up over the next couple of months. But look, property prices are going to hold steady. So if you're an investor and you're in the market at the moment, please don't worry at the minute, okay? Because property prices are holding. If you're looking to get into the market, well, what I'd be suggesting to you is, first thing you got to make sure is you've got a secure job. Look a little bit into the future of that and say, okay, look, my job's secure. Have I held it throughout this virus period? If you have, then you can be pretty sure that now that things are getting back to normal, your job's going to be even more secure. With unemployment at the moment, there was predictions of 30% unemployment, all this sort of stuff. What's actually happened? Well, unemployment prior to the virus kicking in was around about a little bit below 5%. It's now about 6.5%. And the biggest anticipation as a worst case scenario is unemployment now might only go to 8.5%. That's as a worst case scenario. Now, if unemployment goes to 8.5%, that means that nearly 92% of Australians are still fully employed. So that's well majority. And out of that 8%, 5% of those people, are just about unemployable and never will be employed anyway. Let's face the truth. Okay, so we've got 90+% of people still employed. A lot of those people are still earning good incomes. Everybody has to live in something. Okay, you can't live on the street. So property is a necessity. On top of that, once you've got your home to live in, then people are going to be wanting to invest. They need to be building something up for the future. They generally have two asset classes. It's either going to be shares or it's going to be property. For the majority of Australians, property is the asset class of choice. So if you're a person and you're on $80,000 a year plus, well, you're going to have firstly a tax issue. Secondly, further in life, you're going to have an issue where if you're not investing, you're going to fall off a financial cliff. So you need to be investing somewhere. So what's happening to that money? Well, people are being very picky what they're putting their money into at the moment, but the market is moving along. People need to be investing, okay? And you probably need to be doing that too. So if you're looking to get started in the market over the next 18 months, then you need to really consider getting into the market sooner rather than later, because we've still got over 90% of people, at a worst case scenario, still got over 90% of people still employed full time. We've got extremely low interest rates at the moment as well, so it's very inexpensive to own an investment property. And in fact, if you're on $80,000 a year plus, then the property's likely going to be cash flow positive, even positively geared to you. So we've still got high employment, we've got very low interest rates, and there's a huge amount of grants going around at the moment, a lot of government incentives to build property and get into the market. So I think you're going to see that housing sector rise a little bit as well. So my advice to you is look, don't be scared of what's happening out there at the moment. The proof is in the pudding. Over the last couple of months, property prices have been very resilient, and I think over the next couple of months, as things start to open up, job growth happens again, I think you're going to see property prices do even better. So guys, happy investing. If you'd like to talk further about this with us, please jump on our website, rogerspropertygroup.com.au, or give us a phone call and we'd love to have a chat with you. Happy investing and take care.